Hi everyone. We are going to now look at Chapter 7 in our QuickBooks class. Here, before you start, we just want to make sure all of our numbers match up. We're going to focus on doing some adjusting journal entries. And we're going to then look at closing out the books in this chapter. So you're going to want to start with your company, and we're just going to start here right now on page 111, okay? So to make sure all entries are recorded through exercise 6.2, we're going to look at where we need to balance out. So look at your dashboard's business overview and just make sure you're in line with what we have right here. So I'm going to go take mine and look at the dashboard and look at the business overview. And our profit and loss should be at $14,644, as it says here, with $31,140 in income and $16,496 in expenses here. Okay, and then as we look down here, we've got unpaid invoices that are $425 not yet due. We've got our sales of $31,140. So fortunately, it balances here. And then bank account, we've got a bank account of $55,333, which should show right here, $55,333. Okay, compare your trial balance with the trial balance shown right here, 101, 091, 81. Here I'm just going to go to reports. I'm going to type in trial balance and make sure my dates are 01/01/23, and I'll run the report here. 101, 091, 81, and I match. Make sure you check it carefully. The December 31st trial balance shows the work completed in chapters 2 through 6, including the end of chapter exercises. Beginning with this chapter, check your data shows the trial balance completed at the end of the previous chapter. For example, 7.4 shows the exercises on the 6.2 trial balance. Make adjustments if you need to. Now, the December 31st trial balance shows two sales tax payable amounts. Account 207, Arizona Department of Revenue payable, and the Illinois Department of Revenue payable. The amount owed to Arizona is $1,781.81, and to Illinois is $50. We are supposed to record the checks shown in this transaction register. So we're going to show check 1065 to the Arizona Department of Revenue. So I'm going to go in here and banking, or how about I'll just do expenses and bills, or how about I just want to pay a bill. How about new check? That's easy. Okay, so we're going to have Arizona Department of Revenue. Do I not have that in here? Arizona Department of Revenue. Arizona Department of Revenue. And this date is December 31st, 2023. Check 1065 for $1,781.81. $1,781.81. Arizona Department of Revenue, I'm just showing that I'm paying that one. And then check 1066, the Illinois Department of Revenue. Check 1066, and this is also 1231. And this will be the Illinois Department of Revenue. And this will be for sales tax payable. Illinois Department of Revenue payable for $50. Okay. Add two payees, Arizona Department of Revenue and Illinois Department of Revenue. Okay, then as we move on, it is the policy of your company name, sales and service to record adjusting entries at the end of the quarter. The accounting records are complete through December 31st. Adjusting entries are recorded in the journal. Use these steps for entering the three adjusting entries that follow. We're going to select new, and then we're going to create a journal entry. We're going to create the date as 12/31/2023, and we'll select the appropriate account to debit. Type the amount in the debit fields, type a description, and select the appropriate account for crediting, and then we'll hit Save and New. So, journalize and post the following transaction. So we are going to go into new, see if I can find journal entry, and 12/31, the account here is going to be account 623, rent and lease. So it's account rent and lease, and we're going to debit this by $6,000, and we're going to credit prepaid rent for $6,000 and our description is adjust prepaid rent. So we'll just show in here adjust prepaid rent. Okay. Then we're going to now adjust prepaid insurance. Paid a one-year insurance premium on October 2nd. So we're going to go to insurance expense for $750 and credit our prepaid insurance for $750. So I'm going to save and new. Insurance expense for $750, and we're going to adjust prepaid insurance for $750. And our comment is adjust prepaid insurance. Okay, then we've got one more. Here it looks like we've got a depreciation and accumulated depreciation for $800. So we'll do one more. Depreciation expense for $800. And we'll do accumulated depreciation for $800, with the adjustment being to adjust depreciation. And that I'll save and close. Okay, so now as we move on here, we're going to look at reports and select journal in the search fields. In the date fields, type 12/31. And if any of your journals are incorrect here, we're going to want to adjust those. So here is where you see the various journal entries that we've created. And if anything's off, you're going to want to adjust those, okay? Do your journal entries agree? Check each 12/31 entry. If not, drill down and make the necessary changes. Save and close. Export the 12/31 journal to Excel and save it as a PDF. So I'm just going to go here real quick. Reports, journal entries. Well, let me see what I'm doing wrong here. Journal. Okay. Just have to put in journal and put in 12/31. And we'll have the dates. Custom date 12/31. Let me try to go to the classic view. Okay, so here you should see the, let me look and see how I'm comparing the $20 service charge, the $1,781.81 Arizona Department of Revenue, Illinois Department of Revenue for $50, the adjusting the prepaid rent, the adjusting the prepaid insurance, and the depreciation. So we should have $9,401 sitting in an adjustment here. Okay, so as it's asking you, export this to Excel and save it as a PDF file. So again, we can export it to Excel, and then we can save this as a PDF file. Okay? Okay, as we move on, display the October 31st transaction by account report. The transaction date detail by account lists subtotaled by each account on the chart of accounts. Credits are shown with the minus sign in front of them. The transaction detail by account report is shown here below. So as you see here, we've got our detail in our checking. We have our detail in our prepaid rent, in our prepaid insurance, in our accumulated depreciation, in our Arizona Department of Revenue, Illinois, the bank charges, the depreciation, insurance, and the rent. Okay? Export this transaction detail by account to Excel and save it as a PDF. Use the name, Chapter 7, December 31st, transaction detail by account. Next, we're going to display the adjusted trial balance from October 1st to December 31st. Observe that when compared to the December 31st trial balance shown at the beginning of the chapter, the following accounts have different balances or have been added. So we'll go to the adjusted trial balance. And I believe this was put in trial balance. And we're going to have this October 1st, 2023 to 12/31, 2023. The accounts have different balances. So you can see the adjusted trial balance on prepaid rent should have a 0 debit. Prepaid rent, you see it's 0. You will see prepaid insurance is at $22.50. $22.50. We've got our accumulated depreciation at $800 credit. Depreciation expense is at an $800 debit. Our accumulated depreciation here is at an $800 credit. Our insurance expense is at a debit of $750, and rent and lease is at a debit of $6,000. So those numbers will have changed due to the adjusting journal entries we've made. Since 3 months of prepaid rent and 1 year of prepaid insurance were recorded in October within the asset accounts, the insurance and the rent and lease expense accounts needed to be adjusted. Computer equipment also needed to be depreciated, which is being shown in this adjusted trial balance. Compare your adjusted trial balance with these figures right here, and hopefully they match for you, okay? With the totals of $100,060. If they don't match, go back and look at where you're off. You can also do a report of an audit, and you can see what you did, when you did it, what accounts were affected, and adjust that. Again, you'll export this adjusted trial balance to Excel and save it as a PDF. Save it as Chapter 7, Adjusted Trial Balance. Now, we're going to display the profit and loss from October 1st of 23 to 12/31 of 23. So we'll go in here with reports, and we'll look at profit and loss. And we'll make this October 1st, 23 to December 31st, 23. We'll run this report, and all of our new adjustments should be good here as a result of the various adjustments we made. Our new net income should be $7,093.52, as you see right here. Okay? On this particular report, you should save this as a PDF, export it to Excel, and use the name chapter 7 _ EOY and a year profit and loss. Okay? Now, by default, the profit and loss shows all income and expense accounts. Follow these steps to show some accounts instead of all of them. So you see here in our profit and loss, we're showing all these accounts. It's telling us on the custom report page, we can select filter and we can check distribution account, all income accounts. So we'll go to custom. Let me see if I can customize. And we can filter distribution, and we want all income accounts. All income accounts. On the customized report page, select check distribution, all income accounts. Then we can run the report. Here you see the breakdown for just the income accounts here. Okay. Use other filter criteria, for example, all expenses. So basically what they're trying to show you is how you can break it down and see specifically what you want to see. You can use the select on dashboard, go to business overview to see the profit and loss, and you can select this year and it shows you all the invoices in the last 365 days for sales. So here, if I go to dashboard, business overview, we can go in here and look at profit and loss, and we can then see our income and our expenses. Okay? You can drill down from the dashboard's profit and loss amount of $7,094 to go to the profit and loss report. In the report field, type October 1st, 2023 to December 31st, 2023. I can just type in October 1st, and I can run this report. As you see, the total at the bottom of the report is going to be the same as the profit and loss dashboard's net income for the year. It does get rounded up to $7,094, and you see here we have $7,093.52. Okay. The bank account shows $53,468.52 is the balance in 101 checking. after the December 31st bank reconciliation. 2 checks were issued in Chapter 7. So you see in here, $53,456.52 is what we're showing as our balance. Display the balance sheet from October 1st, 2023 to December 31st, 2023. Observe that accumulated depreciation is added in the fixed assets area with an $800 with a minus in front of it. So now the total fixed assets are $9,200 instead of the $10,000, which was the total before this adjusting entry. So again, if I go to reports and I go to the profit and loss, reports, profit and loss, and I'll make this October 1st through December 31st. You see, oh, sorry, I think they wanted me to do the balance sheet. The balance sheet, not the profit and loss. So I'll go to the balance sheet and I'll say October 1st. And you'll see here that we have our fixed assets at a net $9,200 here because of the journal entry that we prepared. Okay, so you see here in our balance sheet, we should have total assets of $75,213.52. Okay. Now, the statement of cash flows from October 1st through December 31st. Observe the balance sheet and the statement of cash flows shows the same net income amount. So as we look at our cash, and I'll go over here to our statement of cash flows. October 1st through December 31st, we should have our net income is going to be the $7,093.50 through, and we should have 53. We should have our cash at the end of the period of $53,468.52. Okay, export the statement of cash flows to Excel and save as a PDF. Use the file name Chapter 7, End of Year, Statement of Cash Flows. Change the title on the Excel file to End of Year, Statement of Cash Flows. Okay? So basically you'll go in here, export it to Excel, and we're going to save it. Well, they want us to change that, I think. They want us to say, if I remember correctly, name, end of year statement of cash flows. So we'll go in here and we'll show end of year statement of cash flows. And then you'll want to save this as a PDF. And I believe they wanted us to save it as Chapter 7, EOY, Statement of Cash Flows. Chapter 7, Hmm. Okay. Okie doke. So when we close the year out, when the date is changed from January 1st, 2023, or to the next year, 2024, net income on the balance sheet is shown as retained earnings, and the net income and expenses now all have a zero balance. Display the balance sheet from January 1st, 24 to January 1st, 24. We've got to use the next year. So I'm going to go back in here, and in my balance sheet, I'm going to now show '24 through 01/01/2024. And here you'll see that we have the retained earnings is showing as $7,093.52. So now, and again, remember guys, this is the book, so it's going to be a different date than what we're dealing with. But you see our retained earnings, our net income is now in our retained earnings because we are now going into a new year. Export this January 1st balance sheet to Excel and save it as a PDF file using the name Chapter 7, January 1st balance sheet. To verify, display the profit and loss, and the profit and loss should show no information at all. So if we go to the profit and loss and we type in 01/01/24 to 01/01/24, we should see no income, no information at all. Okay? To verify it, you should see that there is no income. Accounts that are closed at the end of the year are always called temporary accounts, and you learn that in your financial accounting class. Temporary accounts that are shown in the income statement, such as income, cost of goods sold, expenses, they accumulate transactions and balances during one accounting period. But in QuickBooks, when January 1st of the next year gets selected, the balances in all those temporary accounts are transferred into retained earnings. And the income and expense accounts all now have zeros. We know the balance sheet accounts are permanent accounts. They don't close out at the end of the period. After the fiscal year is closed, a post-closing trial balance is printed. Only permanent accounts appear on the post-closing trial balance. All of the temporary accounts that are sitting in an income statement have been closed out. So if we go to reports and we hit trial balance for January 1st of 24, you'll notice there will be no temporary accounts sitting in here. So we go trial balance. Did they want me to do post-closing trial balance? Trial balance for 01/01. And you'll see the only accounts you're going to have here are the permanent accounts. Okay? Just like in here, there will be no temporary accounts. There will only be the permanent accounts that are listed in a balance sheet. Also, save this to Excel. Save it as a PDF and use the name Chapter 7 Post-Closing Trial Balance. So you'll save it to Excel or export it to Excel, save it as a PDF, we'll save this as Chapter 7 Post-Closing Trial Balance. Okay. Oh, and they also wanted me to change the name. I didn't do that, guys. You're going to want to put in your Excel post-closing trial balance. So here we will put in here post-closing trial balance and save that. Okay. QuickBooks organizes reports by modules within the accounting system. The report default is standard. There are tabs to make custom reports and management reports. This figure below here, 720, shows QuickBooks modules on the application programming interface diagram. Customer accounts receivables, vendors accounts payable, inventory items, and journal entries and transfers under account. This diagram shows how QuickBooks processes data and how accounting tasks are interrelated and how they're organized. When QuickBooks updates, additional reports can be added. The reports page includes these various sections. Favorites includes reports that are frequently used, and a green star is shown next to them. Next to the star are vertical dots, which is the selection that allows you to customize. For business overview, these reports show different perspectives of how the company's doing. Audit log, which is really helpful, guys, for those of you who've made a mistake and you're trying to see what happened. You can go back and see exactly all the transactions that you have posted or that you've looked at. Also, you see the balance sheet comparisons in detail, balance sheet summary, the business snapshot, all these various ones. You can also look at who owes you money, or you can look at the sales and customers, what you owe, expenses and vendors, sales tax, employees, items for your accountant, payroll reports. So, no, there's so many different reports. You can customize reports. You can go to the report page, display a report, and once the customized window's open, you can click rows and columns, figure out what it is you want specifically for that report and run it. You can memorize the report so you don't have to look at it each time or recreate it each time. So guys, I want you to take some time and just make sure that your numbers are all in balance. And then from there, work through any exercises that you need for the various homework assignments, and then we will begin with the next chapter. See you in the next chapter.